What's going on, everyone? My name is Jeff, and I think I have spotted another really good bargain. Guys, the gaming industry is getting killed right now. Of course, earlier in the week, we covered Electronic Arts after their disappointing earnings call, and we seen their stock slump to 52-week lows. Actually made a video about that, and I just really want to credit you guys. The comments that have come in on that video have been great. Electronic Arts actually ran up 16% today, guys. I picked up a position around $81. Now, in that video, I did say I was going to start to take a position around 70. But after the big dip the other morning, I started noticing EA was recovering, and I got in about as cheap as I possibly could. But that position I took is up around $16. Now let's talk about Activision Blizzard. So this past week, guys, Activision Blizzard has made all new 52-week lows, dropping down as low as $42.50, and since then has seen a very small recovery. Well, right here should give you some kind of idea. We are only a couple of months removed from Activision Blizzard trading around the $83 range, and their 52-week high was $84 and some change. Where Activision Blizzard is currently trading, guys, it is actually 50% discounted, from its 52-week highs. Now, I know the guidance has been lowered for Take-Two Interactive, Electronic Arts. We have not quite got to Activision Blizzard's earnings report yet. That is coming next week. And so right here is pretty much all the information we need for Activision Blizzard, okay? So at a $33 billion market cap, that is almost 50% discounted from its highs back in October, when it's seen close to a $67 billion market cap. And their earnings report is on February 12th, okay? So on Tuesday of next week, I will be keeping a close eye on Activision Blizzard. But I actually took a position today right under the $43 mark. It only traded under $43 for a little while. I thought it might take some sympathetic gains because Electronic Arts was running up so high today, but it did not do that. Activision Blizzard could dip down further on an earnings miss or a lowered guidance, but I think it is going to have a similar reaction as Electronic Arts. I think if it does dip temporarily, I think it will have a quick reversal back into the positive in just a short period of time. And guys, I'm going to tell you exactly what this reminds me of. This big slump in gaming stocks, it reminds me of back over the summer of 2018 when Facebook, Twitter, and Snapchat all got lowered guidance for 2 consecutive quarters, and those stocks traded down for nearly 6 months. And now, at the start of 2019, they're starting to receive a reversal and a recovery. These all three, Activision Blizzard, Take-Two Interactive, and EA, are all great companies that are getting overly beat down right now. And I think you're going to want a piece of all three of these companies, going forward for the next 4 to 5 years, perhaps longer than that. Activision Blizzard is a very profitable company, and they are positive on all categories: profit margin, operating margin, return on assets, and return on equity. And guys, this is the only stock of the 3 big gaming companies that does pay a dividend, okay? So Activision Blizzard does pay 34 cents yearly. And like I said, as that stock price is coming down, that yield is going up, still not quite 1%. But let's wait till the earnings report. They might actually bump up that dividend to kind of help motivate investors a little bit right now. Of course, this stock here, guys, historically has lived and died by its growth and not necessarily by its dividend. Everything checks out on their balance sheet. Like I said, $3.4 billion of cash compared to $2.6 billion of total debt. So anytime I see a company with more cash than debt, I consider that to be a very investable company. And I also consider that a situation where they could bump up the dividend. So go down to the comment section, guys. Tell me where Activision Blizzard becomes an attractive buy for you. I think we've already hit those levels. Like I said, even here at $43, I think Activision Blizzard is a screaming buy, being on a 50% discount, from its 52-week highs. Then again, I can also understand waiting till after the earnings report to see if they're going to take any more losses. It's probably going to be safe to say they're either going to have a miss on earnings or lowered guidance, the same with EA and Take-Two Interactive. But I started a position today on Activision Blizzard. I've got a position in Electronic Arts, and I'm also averaging my position in Take-Two Interactive down right now. And so if I see Activision Blizzard dip under $40 on an earnings call, guys, I probably will be buying some more. So I want to stay very focused on these 3 stocks right now. Anyways, we got a big week of earnings ahead of us, guys. Thank you so much for watching the video and have a great day.